Hey friends, what's going on? Leo here. Today we're going to be doing an update on Bitcoin, and I've cleaned off the chart, so I'm going to go through with y'all kind of my thoughts here and where we're headed, and I'm going to kind of take a step back from Elliott Wave, start with a real clean chart, and just kind of work from the price action. Now, the one thing that you probably have noticed that I have on here is this big pitchfork. It's called an Andrew pitchfork. It's a very useful tool in trading because one of the rules is that there is an 80% chance that price will return to the median line, and that's going to be the red line right here in the middle. And you want to use the most significant two pivots and the most recent ones. So um, more so on uh, the most significant pivots than most recent. It's kind of situational as far as what's to be considered. Uh, don't worry about that for now. But anyway, so the point is that you have market geometry. It's real basic when it comes to price action trading. And what you notice here is how neatly this channel is fitting with the price action and it's respecting it very well. So what I mean by that is that if you come here, as we're coming back down, look at that median line's still in play. Prices are kind of trending up, it's holding it, and then finally you get your breakthrough. And so you also get a touch here, comes right up to that. These are called your parallels. So all that means is that it's running parallel to your median line, and you'll often find that it has quite a bit of significance to those, even all the way out to here. Let's see if we get a, see if, so there we go. So you can see that it didn't quite touch that would be the 2x parallel. So you have one deviation, two deviation, and then the dotted lines are going to be your 50s. I'm going to go ahead and take that off there just for make it a little cleaner. So let's see here. So now what you can see is that it's held here, right? And then it held again, and then it held here. And then we're testing it as resistance now, this 50% deviation from the median. And I know that we've had a little bit of a dump here and people are kind of starting to panic, but just take a step back, figure out where we are. And then I want to point out this fractal pattern that I'm seeing here. So one thing you'll notice is how we bottomed here and everybody's like, oh, the bottom's in, blah, blah, blah. And then we had this other steep drop. Well, if we look back to the prior bear market, very, very similar. You notice we have that first big drop, and then we almost have another double bottom here with this long wick. But what you'll notice is that the 200 EMA right there, that white line, held as support. We got through it a little bit, but it pretty much held. It wanted to get back to that median line. That's what that was. There's an 80% chance that price will return to the median line. So then prices went up again and came back through the 200 EMA, just like we did here, held as support, and now we're trending up again. So now that we know that, well, we don't know, but it's very probable, I would say, that this is a fractal pattern of the prior bear market low. You get that double bottom type of formation before continuing on, and the 200 EMA holding as support. We're also above the median line. It's all very bullish looking to me. So now if we zoom in a little bit more, I want to kind of narrow in where our supports are and show you that there's really no need to panic. So obviously your 200 EMA is going to hold as support. That goes without saying. Now, this is still a very significant level. So I'm going to come in here, I'm going to look at the candle body closes, and I'm going to stick a dotted line right there. So notice how that's holding prices very neatly. Comes across here, kind of very briefly does it get through there and before it continues back on. Now, zoom in just a little bit more here. Let's go ahead and peel one off of here. It's a little bit choppy there, but I think that pretty much does it. Let's look over here for a little bit more clarity. Yep, there we go. Now look at that. So we get comes up, holds a support, breaks through, resistance, holding here, holding as support, breaks through, and remember, we're looking at the candle body closes. I think that fits it very nicely. It came down to test it here. And so now we have to ask, okay, so what's going to happen? Are we going to dump down, roll low? I don't think that's likely to happen. I think that at this point, it's very likely that we stay above bare minimum, the 55 EMA, which is right around the 9100 mark. And I say that because if you come back to prior bear market, look at that. The 55 EMA is the yellow. In case you don't know, the green is the 21 and the white is the 200. So for the most part, the 21 EMA held the market the entire time, right? But what held it even more is the 55 EMA. I mean, we've had one touch and that was pretty much it. I mean, really, that doesn't really count because that's the start of the bear market. But I really don't see us going below the 9100 area. So that's good. Now, another possibility is that because from my other video that you've seen, I do think that these bull runs and bear markets are lengthening in time, and that really does make sense because it takes more time for that amount of money to flow in and out of the market. You know, you can't throw in trillions of dollars into a market and be in and out in a couple of months. It just doesn't happen. It takes time for that money to flow. So what could happen is that the 55 EMA no longer acts the way it did in the previous bear market. So because these markets, because it's going to take longer for these to play out, what could happen is that the 200 EMA is now going to act as support. It's going to act as the same type of support that the 55 EMA did in the previous bear market, if that makes sense. I don't know if I said that right or not, but essentially what I'm saying is that, you know, if you look back here, essentially this is going to be your 200 EMA for over here. Instead of the 55, the 200 would act that way. I feel like I'm saying that weird. Anyway, that's just a possibility. It's more speculation. I don't think that's really likely. It could, but I'm going to rely on the 55 EMA for the most part. So, but more than that, you know, looking at price action here, you know, we're above this support, and I think what's most likely to happen is consolidation. I don't see us breaking this level. I really don't. It's I'll put it this way: if we break this level and we start breaking down, I'm going to start not thinking that the bull market's in. So I don't say that to scare anyone, but if this happens, it's not acting the way it did within the prior bull markets and the prior cycles. So if we even come over to here, and this is my chart that I was just talking about, how I feel like the cycles are expanding in time. You know, I think that's the 1 week. Yeah. So looking here, you know, there's your 55 EMA. It's holding prices. You know, go back before that, held prices the whole way. Same with the 21 EMA. Get a little bit of a dip down, but for the most part, it held. So if we start to not see that going into this bull market, it's not going to make me feel good. I'll put it that way. It's going to make me a little bit nervous because then I'm not going to know, not nervous, but I don't know where we are at that point because it's looking very much like we're going into a bull run. You know, we have the fractal pattern. Elliott wave count supports it, in my opinion. The price structure supports it. As far as the time goes for these cycles, that supports it. We're right around the time that we should be starting a bull run. Everything points towards the bull run starting. One thing we could also do is jump down to, I believe it was the 1 day that I saw this. Nope, maybe not. I think it was the 1 week. Yeah. So if you're looking here, right, comparing this point to this point, the double bottom essentially, notice how we got that big, oh, mother. Well, notice how we get that big rip up and then we stop, right? Well, initially we get a big dump, but then it holds at the 55 EMA. So it's sort of what's happened here. You know, you have that wick down and then we had this big run up, but it doesn't crash necessarily to and continue on down. It more or less just kind of meanders sideways and a little almost looks like a little ascending triangle there, but it, the pattern doesn't really matter. What matters is that we got the shot up and then the 21 EMA is holding and we just sort of consolidate on top of it for what is that? The peak was around November and then the next big move was November 2015. Next big move happened May. So like 6, 7 months down the road, this thing finally had a move. So, you know, I that would fit very well with these parabolic trend lines and what we would expect. So if we're just going to kind of consolidate here and move slowly. So let me see if I can get a little, I want to say it's this one. Hmm. Whoa, that's not what I wanted. Yeah, so we get something like that. I think that's very, very likely at this point. Another rule with the median line is that prices will often make a bunch of pivots around it. It's going to chop back and forth. So on a larger time frame, that's essentially what we're doing is we're just kind of chopping around, consolidating before price is moving on and testing the 20K highs, which is somewhere around March 2021 or something like that. It could happen. But the date's not real important. What matters here is the pattern, you know, this repeating pattern, this repeating fractal pattern with the market cycles. God, this is driving me nuts. Okay. Um, but that's what I'm expecting. I'm expecting some sort of consolidation here around that support that we saw in the other chart, get a little rip up and then break consolidation. And then we really don't get into that hyper bull phase until, you know, the very end. You know, let's see here. When was 2017? So 2017 is here, right? Now, if you look prior to that, it was mostly you get a rip up and you consolidate, consolidate, consolidate. You get your rip up, consolidate, consolidate, consolidate. Then 2017 comes around, that last year, and then things get stupid. Then things just start really ripping and getting out of control. So we're not there yet, you know? We're just consolidating, we're chopping, and we're probably I would expect probably another big move. And by big move, I mean testing 20K highs. You know, it could be 6 months or so. So just sit tight, don't panic, and try to keep big picture in mind. And everything's fine. Bitcoin's not going anywhere. There's no reason to. What I don't want you to do, or what I wouldn't do if I was you, I can't give you financial advice, but what I don't want anybody panicking. You know, they see a drop and they're like, oh my God, you know, what if the bottom's not in? What if we're going back down to 3,000? Well, the data is just not there to support that. I just don't feel like that's going to happen. You can have a lot of bear hopium of wanting to buy back cheaper, but look at all the support, right? So we put in a higher low, right? We've held the 200 weekly moving average. We're above the 55 EMA. We're above this support. We're above, where is it? This area of support. Actually, it'd probably be easier if I go back to that chart. So we're above this support, you know? Everything that we're seeing here is pointing towards a bull run. You know, from a time perspective, now I got to go back to the other chart. um, from a time perspective, this is right around that time where we're going to be moving into that next bull phase, assuming these patterns continue. So don't focus on the short-term fluctuations. It's Bitcoin, it's bipolar. I mean, it can do anything under the sun. So keep long-term perspective in mind, and we're trugging along. You know, we're moving well on our way. Um, but I think that pretty much gets the point across as far as where we are. The big takeaways from this are going to be we're above the 200 EMA. You know, we're above all of this support. We're essentially right where we need to be. But anyway, if you found this video informative, please like, share, and subscribe. But more importantly, please subscribe. I'm trying to get to that 500 mark. I hear that's a good milestone to get to. I think I've got like 90 subscribers to go. Anyway, friends, take care until next time. Thanks.